Hey, welcome friends to this video on price action course correction through support resistance and intrabar trading. So 2 points to this video. Numero uno is, you see we get a big volume bar here. By the way, this is live. I'm not actually doing live trading right now. I just wanted to show you as the market's moving the important things that we have to watch. So you'll see the bar. This is a 2-minute chart, by the way. I'm doing it 2 minutes so that we can see these bars forming in real time and closing in real time. So if you look at the one right there that we have right moving right now on the hard red edge of the screen, looking pretty green so far. But before that, we had this big volume spike. Okay, now we had a little pierce of that resistance level. So the resistance level is that cyan line there. Probably could have made that a little darker. But anyway, we had a little pierce of it here. And then this big volume spike come in, wide range bar. And what I want to point out is the real body of this is narrow. And we had, 1, 2, 3 levels there, or one level that it got hit 3 times, closed above the line. And so this is really the 1, 2, 3, third time we've gone up to that level. But these came in low volume. So these tested resistance at low volume. In other words, not much energy of the market, not much demand, if you want to put it that way. Even this bar reached above it, pierced above it, closed below it. And that's the important part. So that wick, we call that a rejection of value, where price is attempted to exchange up there. But by the time that bar was done, it ended. Then the next bar, just the opposite. So that bar we had a rejection of value to the upside, and then this next bar to the downside. This one closed below the resistance level. That one closed above it. So not too much difference, really, when you look at it, except for the big thing is that we had this big rejection of value. Look how wide range that is from high to low. And those low prices down there, the market said no. No, we think the market's worth more than that. And so when all was said and done, after that whole 2 minutes, I know it's not much time, but you can, translate that to any time frame that you're using, daily bars, 60-minute bars, whatever. And that's the point, though. These long wicks are showing the supply demand. This one more to the demand. People are saying, yep, the price, we like the higher price here. We're willing to pay it. And they show that with the number of orders that come in, the number of shares, contracts, or lots, with that big volume spike and a rejection of value. So that is what gives you a good signal that, okay, we may just break this resistance level now. After a couple of failed attempts, this is the one that might actually break above it. Now, how long? We have to watch it bar by bar, and that's the key. We're always watching price action bar by bar. We do not know what's going to happen in the future. No one does. If they tell you they do, they're either lying or mistaken. And it's kind of like a chess game where you make your move, and then you wait for your opponent to move. What's he going to do? What's she going to do? You don't know. But you look at all the possibilities, and you consider them while they're thinking about their move. So that when it's time for your move, you've already considered all their possible moves, and then you're ready to make your move, and you don't have to sit there and wait. So we're looking at this level up here as a potential target. Because we've already broke through this resistance. Now, of course, it could be a false breakout and could come down. So again, how do we know? Well, we just watch it bar by bar. Could come back down to, resistance, could become support. And we just continue to watch what we've got here. Now, as we're watching this, so look at the current red bar. Oh, look at that. Now, that looks like a bullish bar. So now we've got a rejection of value to the downside, long wick in the bottom. All right, and the open and the close are real close together, even kind of turning green here. So this is a mistake people make, though, is they read it intrabar. So they say, oh, we've got a pin bar here, a bullish pin bar, rejection of value to the downside, and they lock in that decision before the bar has closed. Well, there it goes, just closed. And so as you can see, it did not close that way at all. And so the second lesson here in today's video is do not evaluate what type of candlestick you have until the bar has closed. You cannot evaluate them intrabar. That does not count. That does not help. You could be thinking about it, but do not make a decision. Do not make a buying or selling decision based on what is happening intrabar, because these things change. Well, not only can they change, but they do change. And we saw it right there before our very eyes. So again, now we've got what's going on the current bar here. It's still pretty narrow range, not a lot of commitment yet to the upside or the downside. I would just say pretty much neutral. Just because it's green, oh, now we're getting some movement up. Close is above the open. Okay, getting a little more expanded there. Do I think this is bullish? Not yet. I don't know. Watching it. Am I ready to buy? No. Okay, why? Because it hasn't closed. I don't know what kind of bar that is. Neither do you. And neither does Warren Buffett. And nobody else does either. All right, might think you got a bullish bar. Maybe you will, maybe you won't, but it hasn't closed. So again, never evaluate. People at this point, well, see, especially even now, they're like, oh my gosh, oh, this is definitely going to be bullish. Really? Are we going to go up to meet that previous high? And they're convinced. And they're like, oh, I'm going to buy, I'm going to buy, I'm going to buy. Okay, that would be a fool's errand. You do not know how this is going to close. Nobody knows. I don't know. Maybe it will. We'll see here in just, well, probably just a few seconds since it's a 2-minute bar. Well, there it goes. Coming down, coming down, coming down, kind of stuck. Oh, going back up, going back up. I mean, isn't this just like what you experience? Well, sure. This is that's how the markets are. They're making decisions. When I say markets, market participants, you and me, people making decisions. Well, there we go. Now we've closed. Now we know what kind of bar we've got. We've got a bearish bar. That's a bearish bar because it has a rejection of value long wick on the top. I don't give a mouse's left patootie that the real body is green. Again, the open to the close are pretty close together there. Therefore, that's rather just, not here or there because they're real close together. Now, if it was a wide range bar, the range, wide range bar from open to close, the real body was wide range, in other words, then the color makes more difference. Then whether it's red or green, yeah, that's more significant. But when it's narrow range between the open and the close, the real body, then that doesn't really make much difference. So the long wick above or the long wick below, that's what I'm more interested in. That's why I call that a bearish bar, even though it's green. Okay, that long wick up there. Just the opposite of what we had that got us above or broke through resistance. Now we've got it, the long wick is on top instead of on the bottom, narrow range real bar, and therefore it's a bearish bar. So don't get too enamored with green and red. That's kind of a third lesson I would say to take away from today's video is, and people do this all the time, get very enamored, green, red, green, red. It's kind of like stop, go. Do not get carried away with that. All right. So we've got, a lot of red bars over here. But you got your rejection of value up there, and you had some green bars coming into it. Didn't last too long. Look, we got a big red bar here. But how far did that go? Again, didn't go very far. So do not get caught up in the green-red thing. It is not as meaningful as you might think. You've got to look at a lot of different things, the landscape of the market, the entire, everything that's going on in the market. And candlesticks, yes, they're very important. And we do watch them bar by bar in the context of everything else going on. Well, I'm going to stop it here, my friends. I do want to give you my rubber band trade. Just go to rubberbandtrade.com. It's something I give to the trading community as a gift. It's one of my favorite trade setups, and I'm happy to share it with you. Absolutely free. Get this trade. I can teach it to you in about 30 minutes on this video that I have for you. And I'd love for you to start making some money before you spend some money. Rubberbandtrade.com, my gift to the trading community.